Welcome back. You're still tuned in to Midcap Radar on CNBC-TV18. The hotel sector is in focus. Q1 did see some disruptions, but what's the outlook going forward? Patanjali Keswani, Chairman and Managing Director at Lemon Tree Hotels, is joining us for a conversation. Mr. Keswani, good afternoon. Thank you so much for joining in. Before I speak to you about what happened in Q1 or what the outlook is going forward, can you talk to us about what's happening with the company? The stock has been buzzing lately. In the past, you've spoken of an alternate structure as well in terms of asset structure. Is something brewing? Are you looking at an alternate asset structure? Any change in corporate structures? Demerging any of your assets?
Good afternoon. Well, that is certainly one of the options we are looking at. What I think I have said in the past is that we are going to basically have, we already have an asset company in a joint venture with a Dutch pension fund, and our intent is to list it. Now, the way we list it is actually what is under discussion. Will it be an IPO, and in which form? That is something I cannot comment on right now, but it is under discussion, and we're very clear we want to do it as quickly as possible.
So is there a timeline to that? Do you think it'll happen in this calendar year or maybe this financial year?
No, I said it would be by the end of next year. So we are still sticking to that. It could happen earlier, but broadly in the next 18 to 21 months, this company should list, and I think it'll have a very successful listing.
Mr. Keswani.
Yeah, please.
Yeah. So I understand, you're talking about Fleur Hotels, where you've mentioned the possibility of an IPO. You expect to complete that particular transaction by the end of FY27. What's in it as far as the shareholders of Lemon Tree are concerned? What is the holding of Lemon Tree in that particular company? And what will be I believe, that particular transaction will be to reduce debt. So what will be the debt pre and post that particular IPO?
See, our debt is not so high now. It is... our debt to EBITDA is less than 2.5. And by next year, anyway, it will be less than 1.5, closer to 1. So the intent is not only to reduce debt, which will happen automatically. The intent is also to split the company into an asset-heavy side, which attracts a certain type of investor, and a high-growth management/brand/technology side, which is where Lemon Tree is. Why are we doing this is basically because return on capital obviously is enormously higher in the asset-light side of the business, but it needs large scale in order to be chunky. So we want to focus on ownership/development of assets in Fleur, and management and, as I said, brand in Lemon Tree. How will it benefit Lemon Tree shareholders? Well, depends on the structure of how we list Fleur. But as I have said before, we are certainly looking at a way to significantly reward shareholders of Lemon Tree in this, because we currently own about 60% of this joint venture, and we intend to become deconsolidated, which is our shareholding should drop below 50% in this company. And obviously, how we reward shareholders is also part of this entire discussion.
Got that point. So this is something which is developing. So once there is more finality or more agreements to whatever you're looking at doing with this asset structure, we'll have another conversation. Mr. Keswani, about the business right now, there is a note from Lara today. They spoke about some one-offs that Q1 saw because of a lot of geopolitical risks. Did Lemon Tree see disruptions because of that? What was the occupancy like? And also, because of disruptions, did we see any change in pricing?
As I've said, I'm pretty happy with how we performed in Q1. I don't want to comment more than that. It is very much in line with what we expected. Yes, there was a disruption because of the near war or war. There was a disruption because of COVID. There was a lot of news articles that COVID was coming back. So there have been multiple small disruptors. But overall, as I said, we've done as well as I was hoping we would do in Q1. There is, I think, going forward, we are waiting for really H2, which is when we significantly reprice. I read in your thing that Amritsar saw a contraction in hotel rates. Well, a lot of city saw a contraction in rates because of that temporary disruption. But I think things are coming back to normal, and Q2 should be as we expect, and H2 will be very, very good. That I think I can already sense.
Okay, so recovery in Q2 and H2 is expected to be strong. That's what we take away. The other important question is, going forward, how do you split growth? Number one, between the RevPAR, the management fees, as well as new openings, because that is something that the street wants to know.
See, we are growing very, very rapidly. So if you look at Q1, we signed 1,350 rooms, 15 hotels, most importantly in 6 new cities. We opened about 400 rooms with 5 hotels, and one of that was in a new city. In July alone, we will sign another 10 hotels, and in 8 new cities, 800 rooms. So the way I see it is, growth is in the asset-light business is not chunky in EBITDA, because basically every time you manage, say, 7 rooms, you really get, or 6 rooms, you really get the EBITDA of only 1 room. That is your share of the fees. So obviously, for it to be significant, you have to add a very large number of rooms when you compare it to an asset-heavy side of the business. For example, we will sign 800 rooms in July. That would be like, when these hotels operationalize, that would be like opening a 120-room hotel. Because that is our share of the EBITDA. What's our perspective? See, broadly, if you look at India's personal consumption expenditure, which is about 62% of GDP, about 40% is staples and 22% is discretionary. And most of that discretionary consumption occurs in the top 200 cities of India, which have a population of 5 lakhs or more. So we are very clear we want to be in all these 200 cities. What we track most closely are which are the cities which are growing very fast, have better connectivity based on airports, airlines, roads, and Vande Bharat. And we want a presence there because it has an impact onto our entire network. And that's what we really track.
Okay. We take that point. Such insightful comments coming in from you and more understanding of the industry as well. We have completely run out of time, Mr. Keswani, but we'll have a conversation again after your Q1 numbers. You did speak about a blip in Q1, but Q2 will be strong. And you spoke about addition of keys and hotels as well. That's the word coming in from Lemon Tree Hotels. For now, we'll slip into a break. More on the markets on the other side. Stay tuned for that.